Thinking of investing, working, or starting a business in the cannabis industry? We've got you covered right here on Plant Problems. Hosted by Tony Frischknecht, Plant Problems takes a different approach to cannabis than what you're seeing and hearing from the mainstream media. Come along with Tony and be in the know about how to invest, work, or start a cannabis business. Let's get the show started with your host, Tony Frischknecht.
Hey everyone, and welcome back to another episode of Plant Problems. Before we get started with our guest here today, I want to talk with you guys for a minute. And, I was chatting with this is a little tidbit that I got this weekend. There was a gentleman that he's really into podcasting, and I thought this would be interesting just to share with my podcast listeners out there, guys. We have all links of episodes, right? And everybody only has so much time in the day. So something that he reminded me of that I completely forgot about is on your app, you should have a way to speed up the episode. Now, it may make the guest or the host sound a little bit funny, but if you're in need of getting through the episode quicker, step it up 1.5. I don't know if you can go 2.25 and still understand what's happening, but that's my little tip before we start this episode. So with that, I'd like to go into what we're going to be discussing today. Taxes are so important. And, there's a lot of the industry that is praying that the legal guys lose on this. And so they love the high taxes that come to you as the real business entrepreneur that's trying to do things right. And, I know it's a part of it. However, the survival of the industry itself is in need. So I like to focus a lot on understanding what strategies there are out there for you as business owners that you guys can take advantage of, because it can be the beginning of your business's growth or the end of it, unfortunately. And I've seen it happen on both sides. I've seen people win, I've seen people lose. And so hopefully today, with me and my guest, I'm able to provide you guys another tactic that you guys can use to capitalize and grow your business. So with me today, I have Kevin Wannlund. He started a company called the 280E CFO, and he's helping cannabis business owners lock in long-term growth using all 4 levels of cannabis accounting. So Kevin has had work in auditing and with companies such as Lowry and Associates, Inc., Alliance United Insurance, Alliance Defending Freedom. So he's been in the auditing world for quite some time. Kevin, thanks so much for joining us. How are you doing today?
Good. How are you?
I'm doing fantastic. Thank you for joining me. Kevin, will you share with the listeners a little bit more detail on your background in the auditing area?
Sure. Yeah, I kind of fell into the auditing side of accounting, and what excited me about it was the chance to actually get out of the office and meet a lot of other business owners. Did a lot of traveling throughout the state of Arizona, and I added it up. Well, I kind of lost track after several hundred, and in just 1 year, and realized, man, I've met easily over 1,000 business owners over the several years that I did those audits. And it was for insurance companies, so it wasn't like super. I didn't have to dig and probe like an IRS auditor or anything like that. It's more higher level stuff, but it allowed me the chance to talk to a variety of business owners, a lot of different industries, and just kind of realize some of their pain. Some of the normal pain of running a business, but a lot of it I could see on like a tax and accounting side. I could see things that they were missing out on. A lot of times I'd wonder, why are you still being taxed this way when you can tell the IRS, that you want to be taxed a different way and save a bunch of money, but I wasn't really allowed to bring that up during the audits. And so it really started to bother me as I'd see some of the same business owners over and over and just see that they're just blowing money out. At least that's the way I looked at it. I mean, if you're not taking advantage of the tax code, or if you're not really understanding your numbers in your profit and loss, your balance sheet, cash flows, all that kind of stuff, I could just see they weren't really growing the business.
do you see, I mean, on a scale from 1 to 10, say 1 out of 10 businesses, how many businesses really take advantage and use the tax code to its potential?
No, I'd say probably 1 out of 10 have really nailed it. Another 2 or 3 out of 10 might have some semblance or some basic things going on. Well, maybe a little bit higher than that, but they might have some really basic stuff, but then their accountant doesn't have time to really dig in and figure everything out. They just make a couple quick changes and that's it.
Do you think people are lazy or they don't want to spend the money to go deeper? Why do you think that is?
Yeah, it's a couple different things that I noticed talking to the business owners and even meeting with their accountants. A lot of times they don't want to meet an auditor. They just send me to their accountant's office too. So I kind of saw both sides. From a business owner standpoint, a lot of it does come down to money. You want to watch your costs. You don't want to pay exorbitant fees to outside professionals. And part of that is just looking at it, having an attitude of, I know I just have to get my taxes done, or I know I need my books clean or whatever, so I'll just find the cheapest way possible to do that. But another approach, that the ones that really nailed it, they understood the importance of having an expert on their team that would provide a return on the investment working with that expert. So they might pay a little bit more for an accountant, but then they're going to make way more money in savings working with that accountant.
Yeah, which that can make things interesting, right? So Speaking of making things interesting, guys listening to us here today, we're going to try to make taxes as interesting as we can, because the simple fact of the matter is this isn't really that fun, depending on how you look at it. So we're going to do our best to make it engaging and illuminating for you as much as we can, right, Kevin?
Right. Yeah. Well, I think accounting and tax is fun if you approach it with, how can I make as much money off this as possible? And I think
I agree with you.
I think that a lot of accountants have lost sight of in the industry is they think it's just about the compliance instead of working with the business owner and trying to figure out, dude, like, how do we, you've been at the same revenue for the last 3 years. What's going on? Let's dig in and find out what's going on here, because you should be growing. Yeah,
being strategic is a lot of it, I mean, and that as business owners, like you said before, you mentioned this before just a second ago, you said people just want to get their taxes done and just get through it. And they don't realize how much money they're leaving on the table at the end of the day. And if they really got into some of it, it was like, you mean I could save 5, 10, 12, 15,000 if I just did it this way, would make things, you'd be much more excited at the end of paying taxes if essentially you were able to save some real dollars that you didn't have to pay out to the tax man.
Right. Yeah. And anytime you feel like you're sticking it to the IRS, it's
exactly
legitimately though, like, that you're covered, you're well within the confines of what they allow. Yeah. It feels great.
I think it's legitimately, when you're talking, I think people don't understand the fine line it takes, especially in the cannabis world. I was engaged in it for quite some time when we weren't sure if the state was going to stomp us out as a business. So we were extremely worrisome. So I think that mentality of moving forward and understanding that we're using the tax code the way it's supposed to be used, and not to be scared of the IRS, is something that I feel that old way of thinking, we need to change that and let those guys know it's okay to press the limits sometime, and it's okay to maximize your deductions. Yeah. So with that said, so you guys out there that are listening, where will we be getting the relationship between the CARES Act, because what we're going to be talking about today has a lot to do with the CARES Act, and one of the tax code 471C? Where's the correlation? Where do those guys tie up? Can you share some of that info with us? Yeah, so 471C, that actually was, I believe it was slipped into the Farm Bill, the 2018 Farm Bill. I think it was just kind of like most laws are passed these days, there's a million other things kind of tucked inside of them, and this was one of them. And there was a report that I think really started
like tax attorneys and, stuff like that really digging into this and what it means was because there was an Inspector General report earlier this year that came out, I think towards the end of March, that kind of highlighted 471C and even asked the IRS to provide clarification on this. And the IRS disagreed about the need to provide clarification on it. So that was kind of interesting. So yeah, it's a newer provision that is untested, yet very interesting, and could provide a lot of tax savings for cannabis businesses.
Sorry guys, I've got a little thunderstorm happening behind me. That's all that weird noise is. So please don't let that throw you off of listening to Kevin here. Kevin, how does the CARES Act affect businesses, not only cannabis businesses, but businesses throughout the U.S. right now?
Yeah. The CARES Act that was passed during kind of what I call the first shutdown of the first quarantine. At least where I am, we kind of had a second round, so we call it kind of round one and round two. And this was to provide the PPP loans for people, the paycheck protection program. Yeah. So I don't think I've ever said it all the way through like that. It's always the PPP loan. But yeah, that provided a loan to businesses to cover payroll. There are a lot of different stipulations on it, but it can be forgiven if you used it the correct way and track it and do everything your bank says you need to do to submit all the paperwork. And there are a lot of issues with it, as with anything kind of passed in a hurry like that bill was. It did a lot of help for some, and really a lot of other people felt hosed by it. So one of the big groups that felt hosed by it was the cannabis industry, for it being, for them, cannabis being considered a Schedule I drug still on a federal level. It really eliminated those businesses from receiving federal funding, because the PPP loans it was a type of an SBA loan. So the government just kind of took something that existed and just really augmented it for businesses. And so since it's federally backed, there was no way they were going to be able to give that money to people that at a federal level are trafficking in Schedule I substances.
Yeah, I think cannabis companies have been extremely, they've gotten the backing by a lot of states, especially here in Colorado, where they were deemed essential. So that's really helped them launch out of the shutdown that we had, because they never were there. It was they never were completely shut down, which was super helpful to them. And we're starting to see some companies really starting to shine now because of that.
Yeah, there's been a lot of, I've seen reports in like MJ Biz, and they try to collect a lot of data, and it looks like cannabis has seen like a 40% increase in revenue. I know there were some locations that were very heavily dependent on tourism, but if they were able to quickly pivot and kind of reach out to their own community and let them know they're there, they seem to regain kind of their customer base, so to speak. And seem to come out pretty well. I've seen others that struggled, and those are the ones that either weren't deemed essential or they are more on a CBD or hemp angle, and those have had, I think, more mixed results. But yeah, by and large, cannabis saw a pretty sizable increase in revenue, and I always kind of tell business owners, or at least this is what I think, is that accepting government money is kind of a double-edged sword. I mean, it can really help you, but it does come with strings attached and additional things to think about. So if you saw an increase in revenue because of COVID, then I think you're doing pretty well, and you didn't have to take government money and worry about it.
Exactly. So let's get to this part that we were talking about. So I feel like this is it's an amazing secret that nobody's really been talking about yet. At least I'm not hearing it or reading anything about it. But how many people understand, let's say that there's few people that know about 471C. Am I correct?
Yeah, I think so. I mean, I haven't heard it widely talked about. I know there is a group of us cannabis accountants that we feel like we were pretty on top of it, and we sought out expertise from a pretty high-level tax attorney that kind of studies this, and he has a background in the IRS. And so he gave a really detailed presentation. So there is a group of us, but yeah, it's not something that I see just being talked about every day. Like most people know 280E, maybe some people know some of the other codes, but this one by and large, yeah, is not widely known yet.
So, and I've talked to some large accounting firms. Are you familiar with Greenspoon Martyr?
Yeah, and so we're probably talking about Nick Richards.
Well, and I also am very familiar with Rachel Gillette. Now, Rachel Gillette is, she's been in the industry since 2009. She's been around the block she's a great person of knowledge, and she's worked in this system for a long time. And so thank you, Rachel, if you're listening to this, I appreciate it. But if you look at some of this stuff, I mean, we're talking saving business owners. What are we talking? Tens, hundreds, potentially millions of dollars in lost?
Yeah, easily. I mean, it's kind of with an asterisk after it, because it's not tested in courts yet, and that's kind of what we all kind of wait for, like major court decisions to test kind of new laws. So we keep hoping somebody big. Harborside is fighting its own battle for the industry.
They've been doing it so long. I love those guys too. They're strong, and they keep putting money into this industry. And so if those guys are listening, we really appreciate what you guys have done for the last couple decades. So thank you.
Yeah, I know we had some snarky comments about another high-profile company that's not doing so well, that we're wishing that they had stuck around just long enough to test this one for us. But yeah. The other thing, though, that we think about, though, is if we can get the word out about it, and there's if we get a critical mass of companies that conform their books and records to 471C, then maybe it'll help strengthen the case for it.
How can they how can the person organize their? Where do we start? I mean, there's
what is it? Yeah.
Where do we start? Okay, let's start this. Let's start as a base one business owner. He comes in and he goes, you know what? I got my store. I've got my employees. I've got my grow about ready to produce. We're looking at about 6 months. Now I need to look at accounting. Okay, I'm coming in not from the industry, but I'm going to start like as a retail accountant, maybe as a cash method. They're doing their accounting setup. What would you recommend? How can they organize their company around to utilize 471C?
Yeah, so 471C, so it kind of helps just to give a quick
absolutely
breakdown of 280E.
I'm moving ahead of it. I'm sorry, man.
Yeah, no, that's fine. That's fine.
I'm like, just tell them what the good stuff is. Go ahead.
Yeah, so 280E is a tax code that's basic. I think it came about because of the war on drugs in the early 80s, and it's a lot easier to build a tax case against somebody the government deems a drug dealer than it is to catch, to build a criminal case for murder or other things. So financial crimes are always, there's usually a paper trail. It's just easier and cleaner to lock people up for that. So 280E kind of came about, I think, as a result of that. I know it came out in the early 80s, and it just says that you have to report your revenue to the IRS. And that if you're trafficking, Schedule I substances, then you're not allowed to take any deductions. So it's kind of the IRS saying, yeah, even if we say that you obtained that money illegally, you still have to report it to us, and it has to be taxed. The kicker is you got to report it so you get taxed on it, but then you don't get to write off all your normal business expenses.
Yeah, which is probably one of the most devastating parts about being in the cannabis industry.
Yeah. And then another case came out that clarified that you can deduct your cost of goods sold. So that's usually subtracted out of your revenue. I like to explain it as cost of goods sold is like kind of the money you had to spend to actually make that money. So you had to actually buy some inventory and then mark it up and sell it. So whatever you paid for that inventory, that's like your cost of goods. And then you sell it. So that's your cost of goods sold. So the IRS did, get kind of slapped down in a case saying that, this person trafficking Schedule I substances, could deduct some of their home office expenses. They could take some deductions, but it had to be related to their inventory. And so that's kind of where some of the kind of wonky accounting comes in, because then we play all these games with the tax code. That people should be, if they're retailers or manufacturers, should be doing anyways, just to track their numbers better. But you try to dissect, how much of your overhead can you kind of slip into your cost of goods sold so it's deductible. That's kind of the quickest way I can explain 280E and kind of where we are in the industry right now.
I think that's a pretty good explanation without going too far.
Yeah. And and there's other case law and stuff like that that kind of dictates how much of that overhead and which pieces of your overhead you can actually kind of stick into your cost of goods sold. But so that's kind of where 471C comes in, because it doesn't really have all these other strings attached to it like the other parts of 471. We'll say, well, if you're a retailer, you can deduct these indirect costs, these other kind of overhead stuff, but you have to do it this way. It has to be in accordance with GAAP, generally accepted accounting principles. There's just all these kind of tight regulations around it. You got to have monthly work papers basically to kind of tie everything out from, what you're going to put on your tax return versus kind of what you really look at as a business on your monthly numbers. In 471C, it just kind of says, at least in my paraphrase of it, is that as long as you fill out your tax return to reflect whatever your books and records say, then that's your method of accounting. And
that can actually go into your cost of goods bucket, correct?
Yeah. So I mean, the argument to be made here is that you just notify the IRS that you're changing your method of accounting. Right now it's probably accrual. If you're set up that way, which you probably are, if you're doing all the inventory and all that kind of stuff. Mm-hmm. So if you're already set up as accrual, you just file another form with the IRS, and they have to accept it basically, and you just say, hey, I'm going to do my accounting this way according to 471C, and there's a couple other letters and numbers after that, but my returns are going to be in accordance with my books and records. And so if you happen on a monthly basis to do some work papers that kind of reallocate a bunch of your costs into cost of goods sold, well, now you're kind of, playing this game where you're able to deduct all your business expenses under cost of goods.
So what are some of the steps that you could recommend people, and I always put this out there, of course, all this stuff we're talking about, please speak with your CPA or your tax accountant, whoever you use to verify this, because there are some risks involved, and we'll try to talk about some of that too. But what kind of steps can business owners take aside from, going and filing this form with the IRS? What would they have to do in their business if they had to switch their accounting? Is it a lot of work? Is there 4 or 5 steps? What do they have to do?
Yeah, it's mostly more work for your accountant, or it could be less work. I mean, depending on how you look at it, depending on how you decide to do your books and records. It could be simpler. There's full cost absorption accounting right now that helps maximize what you put into cost of goods sold. And a lot of that has to do with, your harvest, what's in the ground right now, when it's going to be harvested, these complicated inventory sheets that we got to have the owners fill out. And then we work our magic.
This, Kevin, if Kevin had his client come in and they said, how do you organize this, Kevin? If I want to switch to this, how would Kevin walk his client through and say, I know there's a lot of different steps to take, but if you said, all right, we start with the grow and we go boom, 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 boom. And then we go to the retail and we go boom, boom, boom. And then we deal with transfers over. Can you give us a few steps on how that would work?
Yeah, I mean, if a business owner came to me and was like, hey, I want to do my accounting according to 471C, and they understood the risk of it, that it's untested, but it is in the tax code, it is law So that is pretty strong. It's not just somebody writing a memo or making a recommendation, like it's actually in the law and would have to be challenged in the court. So if they wanted to do that, I would just say, okay, well, let's fill out this form and this change of accounting form and send it to the IRS. And then from there, procedurally, there wouldn't be, I think, a huge change for the business owner themselves. It would just be me on my end changing in all our, all the spreadsheets basically that we have to do outside of QuickBooks or whatever the accounting software is. We just change some numbers and some allocations there. And that's to get going. There'd be ongoing stuff. But really it's by letting the IRS know you're going to do it and talking with me, okay, how much do you want to put in it? Are we going to allocate 50%, 70, 60? Are we going to come up with some other method that every month we're going to sit down and figure out how much we're going to put into cost of goods? That's basically it.
So can you tell me how else people could potentially benefit from 471C that you know of?
Yeah, that's the biggest one, is just being able to maximize what you put in to your cost of goods sold so that it reduces your net revenue or your gross profit. Whatever. The IRS has slightly different terms sometimes for things that in case law it'd be called your revenue. They call your revenue your what money you bring in minus your cost of goods sold. That's kind of how 280E kind of stuck. And so, if you're decreasing your tax liability, that gives you a huge leg up. Just imagine all the money that you throw to the IRS right now, and now you're able to set it aside. And I would advise just kind of leave it there for now, because if it does get challenged, you would want to, have it set aside to be able to pay the back taxes on it.
So put it in a market of money account, let it grow while you sit, right?
Set it aside and just wait till further notice. But no, that kind of just reminded me of a second thing that's important for 471C is filing the change of accounting form. But you may also want to, believe it or not, you can actually just openly disclose whatever you're doing to the IRS just to give them a heads up. So we're kind of, there isn't any set procedure, but we have noticed talking with other tax professionals when their clients get audited, if they talking to the auditor, they would say, well, if I just filed a disclosure just letting you know that we're selling cannabis, like would you still have needed to audit us? And sometimes they would say, well, no, because then that would make your tax return make a lot more sense. So sometimes even just letting the IRS know up front, what you're doing and that you are changing your accounting and you're going to do it this way, at least disclosing eliminates the ability for the IRS to come assess higher penalties and fines on you later. So that's part of the strategy using 471C is let the IRS know what you're doing. It'll alleviate them. It'll keep them from being able to assess further fines and penalties because you told them what you're doing, and leave the tax savings, set it aside and, spend judiciously, I would say, until it's settled in court or something until there's further clarification from the IRS.
Well, I would say to add to that is that it also gives your attorney, say you have this, you have to go to tax court or you have to go to, negotiate something with the IRS. It also gives you something else. Well, we did make you completely aware that this is what we were doing. So just gives you another paper trail to allow your attorneys to fight with too, because they need all the tools they can get when it comes to the IRS.
Right. And it's especially important too, because the part of that Inspector General report that I referred to earlier that came out, the IRS basically, or the Inspector General basically told the IRS you should be auditing more cannabis businesses because we make like $3,500 an hour doing those audits. They had a couple different breakdowns in there, but one of them was the highest one was when we audit these types of businesses in accordance with these programs, we make $3,500 for every hour the agent is working on it.
Which is another thing for you guys that are fighting it. Keep fighting it because they're making it because people are just saying, okay, well, here's your money, and they're not actually putting in the effort paying for a tax attorney to take them through the process. One of the biggest things from that report, that audit report, was that I noticed, and I'm not sure how many people have read it yet, but they're also, the IRS isn't sharing their guidelines for compliance on how to comply with the IRS and cannabis, which makes it extremely hard. It's like, well, what are we shooting for if we don't know where the target's at, right?
Right. Yeah. I mean, the Inspector General, like, from what I remember in the report, like, point blank told the IRS, hey, you need to come out with, recommendations or clarification or guidelines or something on 471C, because this is all it says. And because it says this is what businesses can do with it. And, the IRS.
Do you remember what the response of the IRS was?
Yeah, there's no need to comment. Or
you said, we disagree, yeah.
Yeah, we disagree, yeah. Yeah, I mean, they're definitely.
Total crap, man. Total crap.
Yeah.
Well, hey, Kevin, one last question for you. I try to talk to my interviewees and say, what was it that you liked most about the interview today?
Sure. I just like teaching people. So that's kind of anytime I can explain something and try to make something that's could be boring or technical and try to make it kind of come alive, and this is why it matters to somebody. That's the kind of stuff I love doing, and that's kind of why I got into helping businesses with their tax and accounting, is because I just like teaching people. Very
cool. Well, I learned some stuff today, which is always fun for me. And I think I hope there's some people that are like, oh my gosh, what's this 471C thing? I need to dig into this, because I think it could be the best kept secret right now and across the industry. Kevin said, I haven't heard many people talking about it. He's heard some tax people discussing it a little bit, but not on a global, for the United States as it is. So people can find you at the 280 CFO, right? They can check you out, or they can Google you. You can also find Kevin. He's going to be tied to my blog page. So if you just go into my blog at plantproblem.com, you guys can click on his stuff there, and it'll take you right to him, so you guys can find out more about him. And then, Kevin, I want to thank you for educating me a little bit today, some more on this. So thank you for that. And I also want to thank the listeners out there for spending a few minutes with me today. And I know I may have taken this a little longer, but I think this information is extremely valuable for you guys to tap into. So again, I would like to ask a request. I've sent some out there, but I would like to request, if you guys know of any accounting methods where you're like, I'm using this and it's crushing it for me, please let me know about it. I would love to share with the rest of the people out here, because we all get so busy building our companies, we don't realize the valuable information that we could be sharing with our neighbor. And I know some of you guys are competitors, but however, to get this thing to really go full legalization, we have to come together on a lot of this stuff. And so this is extremely valuable to a lot of people out there for navigating through the industry. So please come share your information with me, plantproblem.com. You can also catch me on my LinkedIn too at Tony-F2020 on LinkedIn. So please come check me out there and give me a little feedback on what you guys are doing. I'd love to hear it. And if I really like it, I will take it and we can make an episode out of it and we can talk about that further. So Kevin, thank you so much for spending some time with us today and giving these guys a new technique. And I'd love to have you on in the future to discuss something new, if you come across something new that maybe can help some of our legal taxpayers out there. Okay. So thanks so much. I appreciate it.
Sure. Yeah. Thanks for having me on.
You're welcome. You're welcome.
You've just listened to another insightful episode of Plant Problems. If you like what you heard so far, don't forget to tell your friends and colleagues. For additional resources or to leave a review, head over to plantproblem.com. Join us again next week on Plant Problems with Tony Frischknecht. We look forward to having conversations with you as we go along this journey.